Here's exactly how I draw and use the fib to catch beautiful trades like this one. The fib is a continuation tool, so what you're looking for is a move up like this, and then a retracement into one of these levels, and then a continuation. And then, for example, if we had a move down, you draw it from the very high to the very low, and again, you'd wait for a retracement into one of these levels, such as this break retest with a 38 fib, and then a continuation. Now, I use the 23, the 38, the 50, and the 61 fib. Now, why do I use those levels? It is all because of the Fibonacci sequence. If you divide any number by the following number, you get 0.618. The further you go along the sequence, the more accurate it will be. Then if you divide any number by the second following number, that'll get you 0.382, and then the third number, that'll get you 0.236. And I use the 50 fib as a mean reversion. Now going over some basics of the fib, if we see a breach of the 61, so as you can see from the high, we now push past the 23, the 38, the 50, this is still valid. But once we break the 61, then that is invalid for me and I need to draw a new fib. So for example, this would be from the high to the low. Now, why is that? Well, the deeper the retracement we see, then that means that this move or trend is becoming weaker and weaker, and we're most likely seeing some sort of market structure shift, which therefore, anything past the 61%, for me at least, the probability of it providing a pullback is pretty damn low. And another rule, if we break this high, then that is a new fib. You draw it to, well, you'd extend it to the next high. And if we see it come all the way down here and break the low, then that fib is now completely gone and you draw the new fib, which would be this move down like that. So now how do I actually use the fib in my trading? Well, I trade basic levels. So we have this level and this level here. I would then draw the fib. And if we have one of the fib levels lining up with one of my levels, such as this one, the 23 and the 50, that would be a potential area of interest for me. So I'd wait for price to come back down and I'd look for some sort of buyers around this level. And that is a perfect example of this trade here. I didn't draw the fib from this high because if we draw the fib, as you can see, price came down, pushed up, smashed the 61. So now we draw the new fib from this level down to the low. So as you can see, we pushed up, that was fine. And then we saw a retracement into the 50 fib as well as this level, and it had a really nice rejection.